Hey guys, Brett here with Numbers Up Finance. Today we're looking at, this is a pre-market video for Tuesday, January 15th. I'm looking at the Nasdaq 100. This is the daily chart here. I'm just going to go over, some predictions for, today, the rest of the week, possible trade ideas, stuff like that. This is the daily chart for the QQQ. Here I have these light blue lines are trend lines drawn in. This has acted pretty well as a support, except for this giant dip here. This giant dip, of course, was following the announcement of the Fed being hiked yet again. Again, interest rates increasing is going to cause the Fed is national interest rates. Interest rates increasing is going to cause a dip in the stock market. I think there was a lot of panic selling here. The only time we broke this pretty solid support was right here. So anyway, I keep that as a pretty solid support line. We're trading within this channel here. And this trend line here is a pretty solid resistance. We got about, two hits off of it. Here we went a little bit higher. But again, in a volatile market, you can see trends break lines a couple times. I see pretty strong hits, one right here, one right here, one right here, and again we see consolidation right here. That's what I think validates these trend lines. Obviously there's breaks here and there. Trading's not a perfect system, especially in a volatile market. I think these are the trend lines to be watching right now. Anyway, I've had these trend lines drawn in now for, I want to say, about 2 weeks. So just to show, again, I haven't even moved this yet. I haven't edited it at all. To see a kiss off there, I think that validates the trend line even more. So I would believe that this trading channel, this downward bearish movement would continue in the future. Being that we are at a resistance level right now and just rejecting off it, seeing pretty clear drops in the price level, I think now would be a good time to be entering into shorts. If we do move down, all the way to our support down at the bottom, in the next, over the course of the next week or so, we see potential for, anywhere from like a 5% move to, even lower. I doubt we're going to put a lower low in than what we had here on December 24th, that looks like. I would not call for a lower low there, but at least movement down to 150 is what I'm looking for. Again, to clarify that bearish case, here we have the MACD, a momentum indicator. In a bearish trend, what you're going to want to look at is the bottom peaks of prices and the bottom peaks of the MACD. So from this peak to this peak, we're obviously making lower lows on the prices. You can see that there. And from this peak to this peak on the momentum, again, these peaks align with each other. See how that goes straight down to this peak? And this comes straight to this peak. Those are the peaks that align with each other. We see prices making lower lows and MACD also making lower lows. That is bearish convergence, meaning the momentum is agreeing with the prices. Now, the only problem I have with that is I do, pretty firmly believe that all these red candles following the Fed hike, those probably were panic selling. And, at the end of the day, that manipulates the momentum. Maybe we have some false signals here. But at the same time, these trend channels, we're running into the 50-day SMA here is acting as a pretty clear resistance. And it's this white line here. Sorry, it's a little hidden by that blue. Either way, you can see that it's going down, and as long as these prices do continue to follow this trend line, this white line is going to continue falling down. A lot of resistance overhead here. To me, it's a pretty good case for the bears, at least in a short-term trade here, over the course of a week. We also see on the MACD, the momentum indicator here, if we look at the histogram, that probably doesn't help. Look better over here. We see a peak around like these two candles right about here in the histogram. It's starting to dip off. Again, that's not 100%. Sometimes, if you see over here these bright green candles on the MACD, you see those those are local peaks, and then the dark green would be a drop afterwards. But as you see here, it can fluctuate up and down. Typically, though, they do follow pretty predictable hills, here. So as soon as we see this dip, I think that's even more of a bearish indicator. This 162 price line, it served as support here. Old supports become new resistances, stuff along those lines. We have other significant action, this candle here back in March of 2018, also this candle here in April. Pretty solid support line here. Oh shoot, that was a 156. I'm sorry, I'm losing myself here. Anyway, 162 has acted as a pretty solid support line a couple times. So that's it's literally like three zones of resistance here that I just don't see this passing. We've seen a little sideways trading in the past week and stuff, and I think that's just the market building up energy to make a big move here sooner or later. And I think this week would be the week for it to happen. Again, the 50-day SMA acting as resistance, 162 level, and this trend line. All right, so next, I'll switch over to the Nasdaq Futures because this last candle here, this was the end. This is the close for Monday. This is the Nasdaq Future. I typed T on accident. Love to see that. So here is the Nasdaq Emini Futures. These trade around the clock. So even though the market hasn't opened yet, you can see what it's been doing so far. I'll zoom in a bit. This will be the candle so far for pre-market on today, Tuesday. See, it's been green so far. I'll zoom in even closer for you. Here's what we closed on Monday at this price right here. This future for today, this would have opened last night. Started here, and we've seen green since. See this wick here, it obviously got resisted very, very close to this trend line, got resisted well before that. 50-day moving SMA, and we've fallen since then, so I would expect upon market open continue to fall, just adding to the bearish case. Even further so now, I will go into the hourly chart for the Nasdaq mini future. Now on the hourly chart here, we've seen a little bit of increase over the past couple of weeks. Again, most of this happening within these trend lines. Hourly charts like that, or this dip here, that's the couple of candles that we saw break below the support back in the daily chart. Keep in mind this is on a different time frame, and hourly chart means that these candlesticks are hour long. So you're gonna see, like, I don't know how many hours is the market open, from 9:30 to 4. We'll see like 7 candles per day. Actually, this is the future, so you'll see 24 candles per day. It goes back a couple weeks versus the daily chart's gonna go back like almost a year. So anyway, this chart only goes back a couple weeks. We've seen an upward trend here. I'd like to pay attention to this little pattern here. Maybe that wasn't the best place to draw a line. Either way, I see a rising wedge pattern here. This is just another indicator, as these bottoms continue to increase and the tops are, hitting the same resistance over and over and over again. That's a rising wedge, which is again indicative of decrease in prices in the future. Go down to the MACD for the hourly chart as well. See a MACD crossover here, indicative that we might see a dip pretty soon. Also, has been pretty flat trading on the hourly chart here, but if we take it back to about here, since this point at least, we've had increasing prices along with decreasing momentum. So again, I just think that's even more. It's a pretty objective short for me. I'll go back to QQQ again just to outline this trade idea. I'll switch back to the daily chart to finalize this. I'll try to get this video posted before market open. So again, a lot of the signs, a lot of what I'm seeing here on the charts, it's pointing in the bearish direction. Pretty objective short for the QQQ in the next week or so. Maybe set a stop loss. Again, I set loose stop losses right during these times just because the market's so volatile. So I certainly wouldn't set a stop loss right at the 162 marker. Give it some space. You see how big some of these wicks, they'll break through lines, and they still get rejected. So I'd maybe set a stop loss around 164 area. I think if it ever broke below or above that, then we'd start to worry. Even maybe towards 163, just because this trend line is getting lower and lower and lower. I like to play off price targets, significant price zones, because the market reacts to those a lot. But this trend line has acted pretty strong. You might see a big jump here or there, so that's the only reason to play safe. Set a stop loss around 163, 164 for a short. Some sell zones. If you don't like holding on to a trade very long, sell 154 could be at least a place to start decreasing your position size, because you're losing risk. You're losing your reward to risk ratio as you continue to go down. But my primary sell target is going to be around this 150. We see a little bottom here around 150. So I'm thinking that's going to be a pretty strong level of support. But if the bearish convergence plays out, you would expect to see us reach our previous low, which was about 143. But again, I'm skeptical about that, just because it was definitely some overselling by the market, panic selling, as we reached lows that we had not seen, throughout all of 2018. So I wouldn't necessarily rely on it going down all the way to 143. 150 is a safe sell zone, maybe 146 to continue playing off this trend line. But I'll have most of my positions sized out by around the 150 price target. And again, entering a short at market open, that's a 5% move. So hope you enjoyed the video. Hope you found it helpful. If you liked it, like, comment, subscribe. That helps us out, lets us know we should keep going. So get your numbers up. Good luck.